Ladies and gentlemen, I'm delighted to welcome you to the final session of the day. Please welcome on stage our moderator, David Gyori, CEO of Banking Reports, who will introduce the panel.
Thank you. Can you hear me even in the back? Yes? Perfect. So today we will talk about the future of banking. Banking reimagined. And actually we are coming up with very exciting concepts. We have 5 distinguished panelists today helping us to imagine, to think about, to understand, to envision the future of banking. First, Mr. Deepak Colluru. He is from GoCardless, and GoCardless is an A2A, account-to-account payments company, as well as a specialist of direct debit. Deepak will help you today to understand the future of cash. Less cash, cashless, alternative forms of payments. So let's give him a big hand. Second, we have Mr. Michael Nelhams from EPAM. EPAM is one of the largest system integrator companies in the world. It's probably the largest company you have never heard of. They have 50,000 full-time equivalent employees, 50,000. They are S&P 500 company. And actually, Michael has done about 200 high-profile global best practice, many of the 200 payments projects, implementation, real work. Okay, give him a great hand. You will hear today he will help us to understand the chances of digital identity in the UK. Third, we have Alex Phillips from Marsh, the largest insurance brokerage and advisory in the world. And Alex is a specialist of insurance policies for banks and bankers. And Alex will help us understand today what are the risks to insure in a digital-only innovative bank as opposed to a large, traditional, overwhelmingly physical bank. Let's give him a big hand. Fourth, we have an amazing gentleman, Andrea Bacioccola. He is the CEO, General Manager of Igea Digital Bank. Now, this digital bank from Italy is a very, very special digital bank. They are owned by a very traditional private bank headquartered in Rome, but they are digital only with the leadership of Andrea, and they are lending money to micro, small, and mid-sized enterprises, and they are a champion of the future of banking, green banking. He will help us to understand chances of green banking, MSME lending, banking as a service in MSME lending. So let's give him a big hand. And last but not least, we have Mr. Russell Sopp here from Solaris. Solaris is known for core banking, banking as a service, allowing non-banking players or alternative banking players to get the best systems. And Russell will talk to us about the new competitive landscape. Old players against newcomers to the market. So let's give him a big hand. Perfect. You can already guess that the first question will go to Deepak. It will be a short question. You will see. Cashless or less cash? Why and how?
Hello. Yep. Thanks, David. Yeah, thanks for getting me on this panel. This is a fascinating question. I'll start off with what I believe it is, and then I'll go into a bit more detail on why I think it is. I do believe we're going to become cashless, completely cashless in the next decade. Before I jump into the reasons why I believe that, I'm a product guy, so I'll start off with why do we have, I always start off with problems and try to look for solutions. What is the problem that cash is solving? Cash is basically solving, one, transfer of value, and two, as a value store, I guess. Less so on the value store. No one really sleeps with cash under the mattress anymore. But it's mostly because of transfer of value. How do you transfer value from one person to another person, a person to a business, from a business to business, right? So if we look at it from that perspective, that's the problem we're trying to solve. And previously, with the technologies that we had, cash was probably the only solution we had. But things are changing. So I believe it's going to go cashless. And to do that, we need to look at a couple of dimensions. So one, who are the stakeholders in the ecosystem? And two, what is even possible, right? So let's talk about the stakeholders in the ecosystem. So there's businesses, there's payers like you and me, probably businesses as well. And then you have the state actors like governments who are trying to do things in this arena. So if you look at the interests of each of these stakeholders, one, businesses want like low-cost payments, secure payments, something which, with very minimal fraud, low admin cost, and such. And if you look at payers, like you and me, we want simplicity. We want to use it very quickly. We don't want to be carrying a wad of cash, just paying everywhere. And if you look at the governments, this is an interesting dimension, right? So governments want to track a lot of these transactions. Why? They can tax. And two, they can also actively monitor for fraud, AML reasons, for a variety of things. So we've talked about the reasons and some of the behaviors that are driving some of the players in the ecosystem. And then previously, it was not possible to do mostly digital stuff, but things are changing now. We've already seen the evolution to cards, to wallets, like think Google Pay, Apple Pay. Nowadays, I hardly remove my card. I just pay using my Google Pay all the time. And then there's other additional things like the account-to-account payments that are coming through. Open banking, you might have heard of that. If you look elsewhere in the world, UPI in India has really taken off. It's becoming a very cashless society very, very quickly. And then you have Pix in Brazil, which has also really taken off. So they've already set the blueprint. Even in the UK, only 15% of the transactions are using cash. So it's only a matter of time where we just become completely cashless, and all the conditions are ripe with the interests of the stakeholders, with what is actually possible. And then I believe, we're just going to go cashless.
Deepak, amazing summary. And yes, his conclusion is cashless. That is a very severe and important conclusion as opposed to less cash. Do you personally use cash?
I only use cash to pay my cleaner. She does not prefer digital payments, so but otherwise, that's the only time I hit the ATM to get some cash.
Amazing. So I will ask the audience very quickly your past 10 point of sales payments, not online, when you are physically in a store and you are paying for something to a merchant. How many of you have done more than 8 of your past 10 point of sales payments cashless? You see? We are already in a less cash society, and what Deepak argues is that the end station is de facto cashless. And we need minimum 2 things for that, and one of those things is a very strong, very reliable, very much state-supported, very smart digital identity. So, Michael, allow me to ask you, please, is digital identity possible in the UK? Why? How? And what is your professional experience with categorizing digital identity regimes, setting up digital identity regimes around the world?
Okay, so I suppose first I'm going to start with, I'm going to disagree with, I'm afraid. I don't think we're going to get rid of cash in the UK for 30, 40, 50 years. I just don't see it happening. In the environment we've got, with inclusivity, we haven't got rid of checks. We've been trying to get rid of that for 30, 40 years. We're not going to get rid of cash. The European Central Bank also's payments and cash strategy says they will be providing cash across Europe, and they're going to demand that that is accepted by merchants as well. So other countries, yes. Europe and UK, I can't see it for 30, 40, 50 years, I'm afraid. The technology's there, I agree. We're technologists, we are the earlier adopters, but I can't see it happening in the UK.
We should do a panel again in 10 years' time to check.
Yes, if I'm still alive.
Will we? Yeah? Okay, all right. Yeah, we will be here. Finance Magnates London Summit 2033, right? Okay, perfect.
Okay, but I suppose the other bit to answer the question, going forward to cashless, we're touching on the need maybe of central bank digital currencies to replace cash as well. And to do that, you'll need to have a digital ID. In the UK, we have failed badly at trying to do that. It's against any politician. They will not put it forward as legislation. It's unpopular, and they will not do that. And they won't force people in this country to do that. Other countries across Europe and the world, you have an ID when you're born. It's part of life. But here, we've tried, and we've failed quite a few times. So a given identity, digital identity of a person with the database is held by the central government is something that is not really accepted politically within the UK and probably won't happen, I think, for some time. So what we're looking at, I think, instead is a hybrid approach. So it will be, we have, for us, when we go today to get mortgages or whatever we have to do, we get either our driving license, passports, electricity bill to prove where we live, those kind of things. And those kind of things are being more and more digitized and available. So I think what we will get to is a composite ID to actually identify you as a person. So you'll have an ID, but bringing all that information together. So digitize different documents, which makes up your composite ID, which will then allow us to facilitate things like central bank digital currencies and eventually maybe get rid of cash in society. And we've seen that happen because as EPAM, we've actually helped do that in 2 different countries in Europe. So the first one is in Estonia. We've implemented the changes there so that they've got an app which allows you to log on and you can see all your IDs from the government and the digital, on a digital thing and use it as an ID. And the second one is in Ukraine. We have implemented with the digital transformation department in Ukraine a app called DIA, and DIA is D-I-I-A, which means action. This has been implemented so you can get to all of your digital documents. They've built it, and they were building this as a concept to allow you to onboard to banks faster. So it was a digital idea to allow you to do that. But because of the conflict, it's actually taken on a new life in itself. It's now being used for displaced Ukrainians abroad as a trusted way of ID, and they've agreed then with banks around Europe to use this to allow you to show your ID and open a bank account now in other countries. So it's transformed the way that Ukrainians can prove they are who themselves are, and it's brought all of the digital documents together. So we've seen this is being done. We're seeing it trusted by other countries across Europe, allowing Ukrainians to open bank accounts. And I think that is probably the way it will go as well in the UK, because we don't have that that drive or even allow to have the big state to issue you a digital ID number. So that's kind of my view of where I think this is going to go.
Amazing. So you see, sovereign states, governments are sometimes ambivalent about setting up a strong digital identity regime. India, when you mentioned UPI, United Payments Interface, 1 billion transactions through UPI per day nowadays. Of course, these are small value, high frequency, small payments, but isn't it amazing? But UPI and all the other digital banking and payments innovations in India are built on top of Aadhaar, the digital identity regime. Meanwhile, Michael set up the global best practice of composite digital identity regime in Estonia as part of the Estonia National Digital Transition Project. And actually, Michael and his colleagues have saved real lives by making strong digital identity possible in the Ukraine. Can I say that this saved lives?
I suppose so, yes. Yeah, this has helped them, yes. And they're building, on top of that, they're building the central registry, and they're going to use it as a registry for damaged buildings so that they will be able to pay compensation eventually. So that will be the next generation of this central database. Exactly.
Once you have a strong digital identity, you can build everything on top of it. Okay, we are moving to Alex. So, identity, digital identity, identity fraud, risks. What kind of risks can you insure for banks and bankers? And what are the differences in the insurance risk profile of natively digital versus traditional players?
Okay, yeah, thank you so much for all these comments. That's great. So we're very passionate to try and support fintechs and digital banks as they start out, because it's really, it is tough starting a business. So the information we're trying to give here is really to help you, give you insights. We at Marsh probably deal with, I worked it out this morning, every working day for the past 3 years, we've had a bank make a claim through our system, okay? So that's digital and non-digital. And 50% of the claims will be from customers suing for something like mis-selling, or they're not happy with something. There'll be 15% of those will actually be crime losses that the bank suffered. So usually like employees stealing money, might be someone doing social engineering, as we discussed earlier. But also about 15% of them also be from the regulator, will be coming in and attacking the bank over an issue. And the times the claims are made, about 3/4 of them are made against the actual entity, but 1/4 of them are made against you as an individual. And so that's why when David and I were discussing this, it's not just obviously you want to protect your business, but you actually want to protect yourself when you're taking these sort of decisions. So that gives you a kind of flavor of the market. But moving on to like the difference between a technology and non-technology, what we've seen is clearly the biggest loss we've really seen in this space was a traditional bank trying to migrate systems over, and we spoke about this on sort of Friday. But that kind of traditional bank, when they're trying to become digital, is actually the biggest problem. The actual new startup digital banks are in a much, much better position. I think one of the things there is board governance and actually having technology people on the board from day one, because I don't think that was something that traditionally banks had for a long period of time, and I think that's now sort of coming home to roost. The thing where we are seeing more claims is on the fraud side. I think, as people are saying, one of the great advantages of digital banks is speed of payment, setting up accounts, identities, things like that. And as we've just said, the idea of sort of deep fakes, AI usage, social engineering, I think is something that we've seen digital banks have a big issue with, more than traditional banks who have got sort of more checks and balances. And then with the regulatory oversight of digital banks, I think we all support consumer protection and trying to support them, but also I think it's tough for digital banks starting out because the regulator isn't as well versed in their own in that world. It's just a sort of simple fact. But just moving on to the final point on that is the speed at which things can happen. When you look at the collapse of SVB earlier this year, or also with FTX, which I'll come on to in a sec, those happened like literally over a weekend, whereas in 2008, Northern Rock took several weekends or, queues around the building to go to, whereas this idea of information or potentially disinformation appearing on social media or in sort of analyst report can take a bank down in like a day. And I think that's something that people are quite sort of concerned about. And talking about the individuals, if you look at SVB, within they went bust over the weekend, but on Monday morning, the CEO, the CFO, and the CRO are all being sued by the US regulator personally for their part in that. And something Andrea and I were talking about when you start is that as a CEO of a bank, you sit there and being told like, oh, we've got 20 million of D&O insurance, I'm sitting pretty here. But just to give you a real life example, and you can see this article on my LinkedIn right now, then if you look at like what's happening with FTX right now, they were handed documents showing that as the board, they had 20 million of cover. And I think they hadn't quite realised how it works, because as of right now, Sam Bankman-Fried's gone through 6 million of that without anyone else having a go, and the limit is based on a first-come, first-served basis. So he's gone through 6, the CEO's gone through 1.5, the director of engineering's gone through 1 million from insurers, and suddenly, as when you're shown the original certificate at 20 million, it's now 12 million between about sort of 18 of you, 20 of you, and it's not quite the sort of situation you thought of. So I think it's really important to not just protect your business, but think about your own personal wealth and protecting that as much as possible with insurance. I hope that's helpful.
Wow, you hear this? So Sam Bankman-Fried used up much of the 20 million personal legal exposure coverage insurance of all FTX, and the others will go to jail. He will also go to jail. But anyway, good for the lawyers, though. This 6 million sounds pretty good. Yes.
I was going to say, so one of the things I think as we're moving into the digital ecosystem that we've got now, and even if we're looking at the neo-digital banks and the transition of banks from on-prem to cloud, we know there are lots of weaknesses. One of our acquired firms is a firm called White Hat, who are from the Israeli Defense Force 8200 unit, which is their Black Ops hackers unit, and they've now formed a team within our own company. They spend all their time either clearing up cyber attacks that have happened, ransomware, but also do a lot of time on protection. And even now they're finding that for major banks, small companies, corporates, they think they're safe and they're not. They've got the right tools in place, but they are not configured correctly. And so they worked out that from all of the payload attacks that they've got, they can get about 30% through without being detected by many banks and big corporates. So part of insurance risk in the future, I think, has to use cyber attack capabilities to try and work out how risky that firm is before you price in the insurance as well. And it's something that we're seeing with some of our teams.
Absolutely. It's a big growing area, and also for insurers paying ransoms, because some of them are sort of actors in sanctioned territories and things like that. So it's a very interesting area. But
yeah. So actually, White Hats. Yeah. I heard that unit can guarantee to hack into your company without using social engineering. Social engineering is like people doing stupid things, like me writing my password with capital red letters on my screen. But without social engineering, they can guarantee to hack into your company, only if you want.
And they can show you how to fix it. So that's the other thing.
And they will help you to fix it. Yes, that's an important component. Okay, so cybersecurity risks, you are totally right. But the second component of major emerging risks, environmental risks. Look around all the world. So Is green lending possible? Is MSME lending possible in a digitally driven way? Is banking as a service possible in the MSME segment? Andrea, the floor is yours. It's okay, it's on.
It's on. Okay,
Yeah.
fantastic. Well, thank you, and first of all, it's a pleasure to be here. We are a small Italian bank, and David, let me just jump into the initial cashless thing. I'll try to connect the dots quickly, but so I spent most of my life creating digital products, innovating digital payments. Then at some point I decided to go back to Italy after spending 15 years abroad. And when I was there, the taxi driver said, "Can I pay with my card?" "Oh, the POS doesn't work." "What do you mean?" "I prefer cash." So it
Exactly.
worked, but they prefer cash. Then with COVID and other things have changed. And then while moving, getting back to the country, get to understand what was going on, you see that still cash is an important part of society. I agree things will change. We will probably have programmable money, digital euros, and things like that. But some part of cash will stay simply because it's part of the culture and it will take time to evolve. And this thing of taking time to evolve is also what we see on other aspects. We focus on small to medium enterprise lending in a digital way. So we are the digital bank within the group. And everybody says, "Oh, it's cool, you do digital, it must be amazing, it must work nicely," and things like that. You don't have the legacy, you can evolve your systems. It's all true, but the reality is that we miss one thing as a digital bank. Sometimes we miss the direct connection with the customer. We know the customer only digitally, which might be good if you are a consumer bank, but it's not that good if you are a digital bank focused on small to medium enterprises, because before giving money to somebody, you may want to know what's their business, you may want to know the entrepreneur that is behind that business. So for digital bank focused on small to medium enterprises, being able to be on top of the technology, analyze data, understand your customers, even if you don't know them, it's important. And it's important to rely on those like piece of the digital ecosystem that helps you out. Now, in Italy, we have a system called, it's a form of digital identity to some extent. You can register and then you can use this almost everywhere online in the government. And now also the banking world is opening up to this so that you can connect and use it at least to identify people. But it's not enough. We see that still having a relationship with the customer, especially if you want to give 1 million to somebody, and not just do instant lending like a few hundred euros, it's important. So we try to specialize ourselves to be a one-stop shop in the energy space. As part of our banking group, we are home to the largest Italian developer of renewable energies. So when we try to approach our customer, we say, you come to us digitally, but we build together your project to become a green company, to set up your own solar or wind farm. We will help you, we will give you advice, we will get to know your product, your project, and then together we will finance this. Because what we've seen is that many digital banks, especially now with the huge increase of interest rates, are facing a lot of non-performing loans, which is what is going to kill banks. And as part of the being in the management of the bank, at some point you may be even liable of those credit, of those loans. So this goes back to the point you might want to be insured. You know?
Yes.
And so digital is important, the banking is changing, and the way we interpret this change is to try to bridge the gap between the physical and the digital and go beyond just banking, but be helping our customers to transform in their journey towards renewable energy. And I'll close saying that we do use digital also to provide some of our services in a logic of embedded finance, so that other companies can integrate financial services and maybe advisory services in the logic of banking as a service using APIs. But again, it cannot be everything digital, especially when it comes to lending money. You could do, but it's difficult. And in these difficult times, it's even more difficult to pick up the right companies to whom you want to give money to.
Wow. Do I understand well that your banking group basically owns or strategically cooperates with the biggest renewable energy company in Italy?
Correct. So the group owns the biggest renewable. We have like something now on the pipeline, 3.2 gigawatts of renewable plus 1 gigawatt per year now on in the roadmap, and is a traditional bank. So we have a traditional bank with an innovative business in renewable and a digital bank. So
yeah. So listen to this. We are in 2023, and actually, a traditional bank owns the largest renewable energy group in Italy, and they also own a digital-only subsidiary with the leadership of Andrea. And these three entities are synergetically cooperating with each other. Isn't it amazing? This is driving green transition in practice. We can like it or dislike it, but this is a brilliant way to do it. Amazing. So, can I please go to Russ? So, Russ, we have heard from Andrea. They have a traditional bank in the group. They have a digital-only champion in the group. We have heard from Alex the danger of digital bank runs. Did you get it from the words of Alex? From BlackRock, standing in line in panic physically, versus SVB, Silicon Valley Bank, recently, withdrawing the money in a second. Yeah, anyway, Russ, the floor is yours. Old players or new players?
Thank you, David, and yeah, it's good to be here. It's been really interesting listening to the last half hour or so where we've talked around, old payment types, new payment types. We've talked around, that physical relationship between a bank and a customer to more of a digital relationship. I suppose where I want to touch on is very much who's going to be providing these solutions going forward. In the UK, we've had the monopoly of the CMA 9 banks. They're all on the high street. We know who they are. 10 years ago, the Banking Reform Act was brought in to try and promote competition in the banking industry, try and promote innovation. And I suppose that's what we're starting to see now on a grand scale. So Solaris as a banking as a service provider, we have electronic money licenses in the UK and Europe, and also a banking license in Germany. And what we're seeing is a lot more non-regulated organisations coming to us now, looking to offer financial solutions to their customers. And I think this is where the market's going now. We had a bit of a surge, 10, 15 years ago with co-branded credit cards, where everyone from football clubs to airlines to hotel chains to almost a corner shop wanted to put out a co-branded credit card. That disappeared with interchange changing, the rates changing. But we're starting to see it again. And it goes across all sectors. We see in this sector here, we cover wealth online trading platforms. We're starting to see them looking to offer, non-core financial solutions. We see it in mobility, travel. We see it in hospitality, see it in retail. But also, we're still seeing those sort of like neobanks, challenger banks coming up. And I think the advantage they've got over some more of the traditional banks is, if you look at some of the corporates in this space or in the insurance space or in the airline space, they've got huge customer bases already. A lot of them are very loyal as well, and for them to try and, bring other income streams into their business rather than their core offering, it's quite interesting to see. We're seeing some more of the neo-challenger banks not trying to be the next Monzo or Revolut anymore, which was probably what we were getting 4 or 5 years ago. We're seeing them when they're targeting specific use cases where they believe the more traditional banks, the CMA9 banks in UK and some of the largest European banks, don't have either the technology, the user experience, or the want to meet those requirements. I mean, we've had interesting conversations recently with people who want to set up sort of banks for influencers, social media influencers, growing market. The banks, traditional banks, don't know how to deal with sole traders in that market. So we're getting specific use cases that are actually really interesting coming through now. We're seeing, banking, trying to make banking more fun, trying to make banking more educational than, you bank with a high street bank and you never go into a branch, but they still have to have them. So I think things are changing. There's reasons why they're doing this. As you said, they've got loyal customer bases. They can get rewards, loyalty, additional touch points. If you're an online trading platform and you also offer a bank account through your app, you're probably getting 3-4 times as many touch points through your app every day than just as a trading platform. There's a potential for additional revenue income streams. Data's a big thing as well. They're wanting to offer these services because suddenly they've got data on where their customers are spending all their money. So there's loads of reasons why they're doing it. It does mean there's that big tail of them looking at it. Do I personally think that all of these are going to come in and steal the traditional banks' sort of lunch, as say? I'm not sure. I think they will sit alongside them very nicely, but I still guarantee that most of these people who either have accounts with corporates, accounts with non-bank financial institutions, will still get their salary paid into a traditional bank, will still have their mortgage payment going out of that bank, and they will just move their money for spend every month into a different sort of experience to basically spend on.
So new players are surging into the market, banking market, but they don't necessarily pose an existential threat to the traditional, well-established ones. Is it correct?
I think there is a threat there, and I think the traditional banks are struggling to understand how they can. You look at some of the traditional banks; they have 500-600 branches on the high street. That's a high cost. Digital banks don't need that cost, so it's almost how do they adapt quick enough, and we've seen it with JP Morgan have done something on the digital side, and we see it with others where they're trying to bring in that digital side to their options to make them still competitive in that personal retail space, because it is very affluent. That's where they get their balances from for their other services.
It's a really good point, because I was researching before this, and the PRA since 2013 they've granted a grand total of 30 banking licenses in 10 years, which you would have thought is a failure, really, but it goes to your point.
Yeah, exactly. And we see the FCA. I hope there's no one here from the FCA today, but they granted only less than 10 EMI licenses last year. So there is still that need for those organisations to use providers like Solaris and others out there to be able to launch those solutions without having to go through that regulatory process that can take years, to be fair.
Is there any regulator in the audience? I see a regulator. All right. So don't be afraid. He's good regulator, and we are fully compliant. Like we are 200% compliant. So which country's regulator you are from, and did you give new licenses? How many approximately digital-only banks in your country?
Thank you very much. I'm not sure whether I'm a good regulator or not, but
You are a great regulator. You are brave. You stand up. You are with the industry.
Thank you very much. So I represent the Astana Financial Services Authority, which is a new jurisdiction in Kazakhstan, Astana. I work for them, and we are financial services regulator. We also regulate not only financial companies but also ancillary service providers such as law firms, consulting firms. And we've been issuing over 100 licenses. We have started operating in 2018.
100. Then you are practiced in giving new licenses.
Well, it's a relatively new jurisdiction, and quite many firms from the CIS region are interested in this. And I hope that we will be getting more companies interested in the AFC. Thank you.
Absolutely, because in fact licensing is slow and harder when the regulator is less fluent in it, less practiced in it. So regulators who issue a lot of licenses are usually more proficient in evaluating those. Very, very exciting. Let's give him a hand because he was very brave to help our work and very quick, prompt. All right, now a short round of summary, 1 sentence or maximum 2 sentences. Where does it all take us? Deepak.
Yeah, so if you recall Mark Anderson's statement, software is eating the world 10 years back, where he was talking about every company is a software company. Now I believe every company is a fintech company. There are lots of capabilities that are there that where they can embed payments, they can embed insurance services. A lot of things are possible. I think banks are getting disaggregated in a way, banking services. We discussed that banks will still stay, but banking services are getting disaggregated, and on top of that, a lot of new players can enter the market.
Perfect. Michael?
So, yeah, I'd agree there. And I think the rate of change, though, will depend by jurisdiction. So I think UK and Europe, because we started early, but I think other places will take over because they're much quicker in turning over the ideas, learning from what we've done as well. And there's the legacy. I don't see us having cashless society and so on. There's too many. The politicians have to deal with everyone in the society, and the need to do that is part of the society of the UK as well as Italy to use cash still. So that's where I think it's going to go slowly. We've got the technology, we've always got the solutions, but technology is not the answer. It has to be the use cases and the need to do it as well, and the political will.
10 years, FMLS 33. Okay, Alex.
I'd just say it's a really exciting time. It's super innovative. There are risks, but we want to keep your eyes open to it.
Perfect. Andrea?
I'll close with specialization, which means banks will have to specialize, especially new entrants, digital banks, to find an area where they excel and they offer a real value proposition to their customers. It's probably over the time to be generalistic. There are traditional banks for that. Digital and innovative banks have to specialize, both on the consumer and, let's say, corporate side, looking at SMEs as a target.
Perfect. Russ?
Yeah, just agree with everything that's been said. And I think the best thing that comes around from this change, if we do it right, is it just gives more options to the end consumer. And that's basically what it should happen, be it who they bank with, how they make their payments. That choice is what should be driving all the change.
Perfect. Let's give our panelists a big hand. And I'm asking my colleagues, the organizers, do we still have 2 minutes? Yes? Perfect. Very good news. Then I will also conclude. So we will go one by one. My takeaway, okay, about the future of banking. So we start with Deepak. Less cash or maybe cashless. Less cash or maybe cashless. Okay, Michael. Onboarding using a strong composite digital identity. You heard his expression. Alex, new risks, new risk management solutions. Andrea, driving green transition from a banking position. Very nice. And Russ, old players and new players coexisting. These were 5, right? 5 panelists. And I will add one more bullet point of conclusions regarding the future of banking. New primary channel. The smartphone is the current primary banking channel. In 10-15 years, it will be augmented reality and virtual reality. We will check it in 10-15 years. Now, here is something interesting. All in all, I have had 6 bullet points, right? Okay, now you will be Sherlock Holmes, okay? In the 6 bullet points, I have hidden a clue, and you have to find that clue. I will help you, okay? Keep your eyes open when it comes to the initials, the first letter of each bullet point, okay? And you will have to solve this puzzle. Okay, so less cash instead of cashless. Onboarding with strong digital identity. New risks and new risk management solutions. Driving green transition from a banking point of view. Old and new players. New primary banking channel. So let's shout out the solution at 3, okay? 1, 2, 3. London! Great, perfect.
David,
you are better than Sherlock
amazing
Holmes.
job today. That is.
Perfect. Thank you for your attention. It was great, amazing panel. I enjoyed every second. Yes. And let's keep up the conversation. Contact the gentleman, contact me, and let's engage in some interaction. Thank you.